Today, passive income investors, the markets are on fire, man. The volatility is matting. The news isn't helping. It isn't really explaining what exactly is going on, and it has been rocking my dividend portfolio. And I want to break some of this down for you, so let's jump right into this. Welcome back, ladies, gentlemen, and all my passive income investors that are looking for those juicy, drippy dividends. I want to talk about what is going on in the markets, because if you know anything about anything, you've come to the realization that if you ain't buying them dips about a week ago, man, oh man, are you missing out on the flying opportunities going on right now. And I really want to start by recognizing the old Microsoft. These lines don't represent exactly how large these movements are for a company this size, but for Microsoft to go from a high of 130 to like the 120, and just how fast this is happening, guys, is staggering. Same thing happened here where we almost touched the high 30s all the way down, but it took a little bit longer to recover. But this literally happened in a few days, guys. You could have bought Microsoft literally like 2 days ago for almost $1.20, and today it literally just overnight, boom, up a huge amount, which is crazy because, again, this is what I call market fluctuations, baby. It's like breathing. It's like the ocean's tides. It just goes in and goes out, and you have to get used to these breathing motions, because the markets literally, in my opinion, work exactly like the tide. It just comes in and it goes out. There's just days where cash comes in, and there's days where people are fearful and cash flows out, and that's how you have to get comfortable buying positions. This is my non-tax-free savings account here, and we can see Tesla hasn't really come back enough to make any big difference, and most of my companies in this account actually haven't recovered that much at all. As we can see, Constellation Brands is up over 20%. All of these companies haven't done much of anything. They've kind of returned to pretty much what I was paying for them. So we haven't seen any real recovery in this account, because this account was killing it at the beginning of the year, whereas this account is the one killing it right now. Now, if you can't stand the heat, you need to get out of the bloody kitchen, guys, because buying individual stocks can be terrifying, and I just want to show you the roller coaster I've been on. Don't mind my horrible charting. I know you guys love how much when I open up Paint. It's your favorite thing in the world. It's kind of cringy. But I just made a really quick fake graph here just to show you kind of what was happening, because in 2018, so let's go back to 2018, just over a year ago, guys, my account experienced some of the craziest fluctuations I've ever seen it do. We're talking about my stock market stocks. You went somewhere, I think, from a high of almost $114,000 to all the way to $103,000 at the lowest. And it's funny because my account doesn't benchmark these. I have to pay attention to this, but I noticed that my account went all the way down to $103,000, and then literally just went nuts. At the beginning of this year, my account went nuts, and it soared all the way to $118,000 just at the beginning of this year alone. I didn't start the year at $103,000, mind you, but at the beginning, somewhere in 2018, at the lowest of the lows, my account hit $103,000, and from the highest of the highs, I went up to $118,000 right up here, and because of taxes and the wonderful government, I had to pay up about 10 G's, and I lost, out of my own pocket, plus some of my stocks I had to sell off. We came down to $1.12, and then literally, as of pretty much 2 days ago, my account was sitting at $107,000 for the last month, and all I've been talking about is buy the dips, guys. You got to be buying the dips. You should always be buying these dips. These opportunities are far and few in between, and we always get more fearful than I think we need to be. And when that tide goes out, you need to be buying, which is what I was doing. I invested $1,500 last month. I was buying every stock pretty much I could. I bought some BMO, some of my drug stocks. I wish I was buying Apple or something like that, but I was more focused on some of the companies I'm focused on this year. And then as of today, guys, literally within 2 days, we saw full recovery. My account went down from 112 from where it was sitting at the beginning of the year, went all the way down to $1.07 up till literally 2 days ago, and now we're back up, hitting up to the ward 112. We're over 111,000 as of this moment of me making this video, which you can actually see as I show you my accounts, guys. You just got to add the numbers up here, and you can see I'm fluctuating right around the $107,000 or $111,000 mark. The only suggestions I can have for you guys is understand that the market is like tides. It just comes in and it comes out, because if you look up market news right now, there's not the jobs reports. Okay, they were okay. You had Beyond Meat surging, which was doing really well today, but none of this information really seems to be what you would think would be cyclically driving the market, and it's a hard thing to understand because it got down to the future, Mexican tariffs, buzz, fuel, stock market rally. How does that directly drive the markets? It's weird when I think articles like CNBC and like all these different articles and companies trying to predict the future and say, I know what's going on with the stock market today. I always kind of question them. I'm like, how do you know exactly what's going on? I don't even know exactly what's going on. Some days it's apparent. Some day, like if Trump's like, oh, tariffs are over, tariff war's done, blah, 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 blah. I'm sure you'd see the market explode, but there's nothing like that going on today. And we're just seeing this influx of cash just flying into certain companies like Microsoft. And I think it's a really awesome thing. These are the dividend payouts I'm currently getting. You guys can see for those of you that are new to the channel, but let's just take a quick peek at the actual performance here and give you guys a better understanding of how these accounts are working. So the neat thing is literally at the end of May there, because I got my May charting, we can see my best account. So this is a little jumbly, you know what, maybe to save you guys on some understanding here. So all the little dotted lines are basically different indices. Like the S&P 500 index is this light blue line. The gold line is the Russell 2000 index fund. This line down here is the gold index fund, the one at the very bottom. But to clear this up for a better understanding, so to break this down in simpler terms, guys, here are the actual two accounts from start to finish, without any kind of interruptions. I love showing you guys this. So it's funny because going into the beginning of June here at the end of May, I got my charting and we can see that my one account, not my tax-free savings account, but the one with the least amount of money in it, this account right here is up. At the highest of the high was 95%. And then going through the month of May, I lost a ton of value to bringing me down to 51.6%, which isn't the lowest it hit because the lowest we had was about 40.96% return. But man, the volatility in that is wild. And now we're already seeing this really healthy comeback in my tax-free savings account. So we should see that bump up. Hopefully this month, this rally continues or even holds flat. But these are the growth of my two portfolios. I love showing you guys the growth prospects here. And I don't need to, if you're new to this channel, back here, guys, in the early 2014s when I had no idea how to trade, from 2014 to about 2016, I didn't make a single dime. I only saw glimpses of making money. And then I figured out generally how stock market investing works. I think I'm only 5 years deep. I'm by no means a pro, but it's nice seeing these accounts. My one account almost hit 100% return, and my tax-free savings account is sitting up roughly 67% at the highs. And if I just compare that to the basic indexes, so just to show you guys against the two basic indexes, so we have the S&P TSX and the S&P 500. The S&P 500 is the brighter bluer line, and the S&P TSX is the lower line. So this is the Canadian markets versus the U.S. markets versus my own personal accounts. And as we can see, I sit quite roughly well above both of these indices, which is really, really nice. It'd be nice if we continue this. I always have a rule of thumb, guys. If I start consistently underperforming the markets, that I would just start buying index funds. And into the future here, guys, as I build my portfolio over the next years, I'm going to start buying index funds and bonds. I really want to start adding bonds and just more stable things to the portfolio to level this line. Look at how volatile this insanity is. So in the last video I made, I was talking about Canopy Growth Corp, guys. You can see my tax-free savings account. This is where I bought Canopy. I was buying Canopy back here. I was trading it back in the early, and you can see the volatility because I was buying Canopy. There was a lot of volatility in my accounts, and then Canopy took off for me a little bit, and I guess it was the early 2016s. I sold out, and then right around here is when I was buying back into Canopy in my other account because I transferred everything to my tax-free savings account. Canopy took off. So the majority of the growth I've had in my tax-free savings account was because of Canopy, and my other account has actually just been growing because of the stocks that are in it, nothing to do with Canopy. So hopefully Apple, Microsoft, and my utilities and everything continue to grow so we can see my tax-free savings account have some return, because I haven't seen any kind of real growth prospects in it since the beginning of 2018. But mind you, I'm holding these as dividend positions, so I don't really care if there's that much equity growth so long as I keep getting those dividends. But it's nice to see that I'm always above the S&P 500. I hope you guys enjoyed this video today. I'm just talking about this crazy volatility in the markets. I want you to tell me what you think in the comment section below, and consider liking this video if you enjoy me constantly ranting about my stock market accounts. And it's nice to see the positions as well, especially considering how much these positions have changed in such a short amount of time. I mean, it's just, the volatility is maddening. I can't believe I literally, it was like, I was out, how much money did I say it was, from 212,000 all the way down to 107,000. Think about how much money, that's $5,000, literally in a blink of an eye, just vanish and then come right back literally in the blink of an eye, like it didn't even happen. I love how the markets work, guys. I don't buy ETFs, so I don't mind the volatility as much, but I just find it interesting. So stay cool, stay awesome. I look forward to chatting to you guys real soon.